Attention. The following video is a serious financial warning from one of America's richest men. He's broken ranks from the 1% to detail a significant event about to take place in America's very near future. This event will make the rich even richer, while financially devastating countless others, and fan the flames of social protest. Due to the highly sensitive nature of this message, this video could be removed from the internet by powerful interests at any moment. Viewer discretion is advised.
Hi, my name is Louis Navellier, and I'm a one percenter. I own a multi-million-dollar estate on the South Florida coast in one of America's most exclusive neighborhoods. My home is just down the street from Donald Trump's Mar-a-Lago Club Resort. Up the street, my neighbor is the most famous motivational speaker on the planet. I'm sure you've seen him on TV. At my private country club, I rub elbows with PJ greats, titans of businesses, Hollywood celebrities, and even DC power players. I own a fleet of luxury and high-performance automobiles, including a Porsche GT2 RS, a Porsche 918 Spyder, a Ferrari 488 Spyder. I own 5 Audis, including the all-new electric e-tron, 2 R8 V10s, and an RS Q8. Also, a Maybach 57S, which, to be honest with you, is a land yacht. My children, who are now grown, attend only the best private schools. When we took our family trips to Cabo, the Virgin Islands, we only flew in our private jet. Now, I realize these days it's not popular to go public with statements like this, but you should know there's a very important reason I'm doing it today. There's an important reason why you should know that I make a lot of money. The reason I have all this wealth is what makes me uniquely qualified to deliver a hugely important and urgent message. A chasm has opened up in America, a great divide. No, not a crater in the literal sense. I'm not talking about an earthquake or any kind of natural disaster. This one is much worse and infinitely more dangerous. On one side, a new aristocracy amassing more wealth more quickly than any other group in American history. People like me. Today, the 1% makes more money in 1 month than most people make in a lifetime. For people like us, life has never been better, more prosperous. On the other side, the opposite is happening. Wealth is flowing out of the pockets of ordinary Americans at an unprecedented rate. Today, nearly 80% of Americans are living paycheck to paycheck. Most people can't afford an unexpected $400 expense because their wages are too small or their debts are too large to manage. And this problem is no longer confined to the lower classes. 25% of American families earning $150,000 a year now depend on the next paycheck just to keep their heads above water. Think about that. Every day, more Americans are waking up to the sobering reality that they are not immune to the massive changes happening right now. Today, the gap between the rich and poor is the widest it's been in decades. Although wealth inequality is one of the most important social and economic issues of our time, few people understand what is really causing it. Despite what you hear from the mainstream press and news media, it's got nothing to do with tax rates or Wall Street or government bailouts. It has nothing to do with your background or where you're from. I grew up in a small western town you probably never heard of. My father was a bricklayer who worked 60 hours a week to provide for his wife and children. Yet here I am. America's huge and widening wealth gap has nothing to do with our laws or our government or our money either. This unforeseen force is much more powerful than any of those things. You see, unlike the news media or our politicians, I know a lot about what's really causing the huge wealth divide in America. I know because I've used this force to amass more money than I'll ever care to spend. Believe me when I say this force is incredibly powerful. I've seen it turn ordinary Americans into multimillionaires, even billionaires. But those who don't understand or outright ignore it get wiped out. I've seen it devastate the masses, even members of my own family and close friends. The thing is, this force is only going to gather strength over the coming decades. It certainly won't weaken. Few Americans even know that any of this is happening. Those that do don't have a clue about what to do about it or how to prepare for what's next. If you're worried about this situation and its implications for American society, I strongly urge you to listen to this message. I've never seen anyone from my side of the chasm step forward to explain any of these things. That's why I put together this video. In it, I'll lay out exactly what is happening, including several key steps every American should take right now. It doesn't matter if you have $500 in savings or $5 million. You can benefit from the information in this video. It's free to watch, and by doing so, I know you'll be ahead of everyone struggling to understand what is really going on. Why give such valuable information away for free? As someone that loves America down to his toes, I can tell you it pains me to see the situation we are in today. I believe the more people who understand what is happening right now can position themselves properly, and the better off we'll all be. The better off America will be. I encourage, even challenge you to listen to what I have to say. Once you learn the story, I encourage you to structure your life and ensure you and your money are on the right side of the chasm. I was fortunate enough to learn about this force at an early age. If you're willing to embrace it like I have, and like I've already shown thousands of others how to do as well, you too can set yourself up for success, even incredible wealth. I'll show you how. Most importantly, I urge you to do so quickly. The chasm is only getting wider. Incredibly, you have the power to choose which side to be on. But I urge you to take the critical steps I'll outline in this video very soon, before the gap becomes too wide to cross. The best way to help you understand this powerful force is to listen to a story of a man named Reed. Reed is 28 years old. He's very bright. Reed has an idea for a new business. In fact, he's already begun getting his new business off the ground. And so far, everything is working out like he planned. But Reed has a problem. He doesn't have a lot of money. He needs help growing his business. That's when Reed decides to approach an established business in his industry. He figures the two can team up. His newer, younger business can help the older business reach a wider audience and at the same time help Reed's small company grow. Reed sees it as a win-win for both companies. But when he meets with executives, he quickly realizes they don't share his vision. They don't think Reed's business will help them. They've got it all figured out. To make things worse, they're not very nice about it. He's essentially laughed out of the conference room. Reed has no choice but to go it alone. He eventually finds other investors willing to take a chance on his business. Turns out, Reed is onto something. His idea is not just good, it's fantastic. His business grows like wildfire. In fact, just a few years after that fateful meeting, Reed's business becomes more valuable than the established business he approached. It becomes so successful the other bigger company can't even compete. Because Reed's business leverages new technology to provide better value and a better experience, enables him to run his business with fewer employees. This makes his business extremely profitable. Reed goes on to become one of the richest people in America. Investors in his business get crazy rich too. His stock soars nearly 500-fold. Meanwhile, the other company goes bankrupt. Tens of thousands of jobs are lost. Investors who back the business lose everything. It's one of the most abrupt bankruptcies in American history. Incredibly, the story you just heard is not made up. It's the real-world story of how Netflix single-handedly drove Blockbuster out of business. Every detail you just heard is true. Yes, Blockbuster actually had the chance to join forces with Netflix in the early days, but passed on the idea when its founder, Reed Hastings, pitched it to them. Blockbuster went from a market value of $5 billion to bankruptcy in less than 9 years. Its shareholders lost everything. Its pass on Netflix is widely regarded as one of the worst decisions in modern corporate history. Meanwhile, Netflix is one of the greatest success stories of the past 20 years. It has taken over the $2.2 trillion entertainment and media industry and made its founders and shareholders lots of money. What does this story have to do with America's large and widening wealth gap? In a word, everything. You see, what's probably most remarkable about this story is how it's not a one-time, 5-time, or even 10-time thing. This phenomena has been repeating itself over and over again. You've probably noticed in recent years how established businesses that appear sturdy and in control of their markets are suddenly getting destroyed by technological upstarts. Amazon has transformed the way we shop and get our stuff. In the process, it's driven dozens of old-school brick-and-mortar retailers into bankruptcy. Department stores have lost 18 times more jobs than coal mining since 2001. A few years ago, Uber debuted its popular ride-sharing technology. In less than 7 years, Uber demolished the old taxi industry. Airbnb now offers more rooms than the top 5 hotel brands, including Hilton, Marriott, and Hyatt combined. Wikipedia, the free online encyclopedia, has annihilated traditional encyclopedia companies. By 2012, Encyclopedia Britannica published its final volumes after 244 years of circulation. Spotify and iTunes have turned the music world upside down. Google has taken over information. Facebook, YouTube, Twitter, and Instagram have disrupted traditional media outlets. Vast amounts of cheap online content supplied over internet connections killed many newspapers that followed the old business model. Since 2004, at least 1,800 American newspapers have ceased publication. The sector has shed 47% of its jobs during this time. And these are just examples you probably notice in your daily life. Behind the scenes, small tech upstarts are beginning to wreak havoc on established businesses and industries across the board. One small startup, for instance, just developed an AI-based software program that can review and analyze legal contracts faster and with better accuracy than a human can. It was recently pitted against 20 of the best lawyers in America and won. I'll tell you more about this business in a moment, but first, think for a moment the implications this will have on anyone in or thinking about going into the legal profession. What will it do to wages? Similar disruptions are occurring right now in real estate, human resources, transportation, customer service, finance, sales, marketing, and more. The driver of wealth inequality, the force that has opened a large and growing chasm between the haves and have-nots, is technology. Most people don't realize it, but technological disruption is creating a giant shift in the way our economy works and how we build wealth. The destruction of seemingly strong and dominant businesses by innovative, technology-focused upstarts is a story we are starting to see over and over in America. In many cases, these businesses are family-owned, employ tens of thousands of workers, and are the cornerstone of retirement accounts. Meanwhile, technological disruption is enriching those who own and invest in these new technologies at a pace never seen before in human history. It explains why Steve Ballmer, Bill Gates' number 2 at Microsoft, became twice as rich in 2019 as he was in the beginning of 2017. Why tech titans like Elon Musk, Mark Zuckerberg, and Google founder Sergey Brin each grew their net worth by multiple billions of dollars in 2020. And Amazon founder Jeff Bezos got $87 billion richer. while at the same time, huge swaths of America's cities are essentially slums, filled with millions and millions of poor, desperate, angry people. On one hand, America is a place of extraordinary wealth, a place where billionaires travel in private jets and buy $10 million condos with a week's pay. The system is working great for these people. On the other hand, America is a land of extreme poverty and miserable people. To these folks, the system is a disaster. America is the land of the haves and have-nots. Some have absurd abundance, some have nothing. And the rate at which things change in favor of the rich versus the poor is only speeding up, not slowing down. My colleagues and I call this phenomena the huge and rapidly growing divide caused by technological disruptions, the Technochasm. This chasm between the rich and the poor is already large, and it's only going to get larger. Soon the Technochasm will be so large that those on the wrong side won't be able to make the jump, and they'll be stuck on the wrong side for the rest of their lives. You and I are unlikely to change this giant trend. Our political system is gridlocked and utterly corrupt. In Washington, D.C., it's a scramble to get yours, serve lobbyists, and maintain the status quo, rather than actually help the country. That is why I believe it's critical for you and your loved ones to learn about the incredible force that has created the large and expanding chasm between the haves and the have-nots. Let me show you what it is. Over the next few years, we'll see the world change more rapidly than any other group of people in history. The way we work, travel, bank, receive health care, and entertain ourselves will look completely different than they look now. Large new industries will be created at a pace we've never seen before. These new industries will demolish old industries at a pace we've never seen before. And it's all because of the law of exponential progress. If you're on the right side of this law, you're virtually guaranteed to make a fortune. If you're on the wrong side of this law, you could lose your job and the value of your investment portfolio could crater. This incredible force explains why some companies are growing so quickly, gobbling up market share, making more money faster than ever before, and why others are getting utterly demolished, going out of business at the same incredible rate. What is exponential progress exactly? Well, most people are familiar with the concept of linear progress. In simple terms, linear progress works like this. Imagine earning $1 a day for 30 days. After day 1, you have $1. After 10 days, you have $10. 30 days, $30. Pretty simple, right? This linear growth is the kind of growth ingrained into the minds of most people. But exponential growth, the kind taking place in technology labs and businesses right now, radically changes the equation and radically accelerates the pace of change we see in the world. Exponential progress is progress that multiplies in power and scope with each step. Now, instead of progressing in linear fashion, imagine doubling that dollar every day for 30 days. You start with $1 on day 1. On day 2, it doubles. You have $2. Day 3, it doubles again, $4. Day 4, another double, $8. By the time you get to day 10, you have $512. On the 20th day, you have $524,288. By day 30, you have over $536 million. Do you see how powerful this is? Exponential progress is progress that snowballs and builds on itself. Specifically, the progress made in a step is double the amount of progress made in the step that came before it. The important thing to understand is that this is not a theoretical concept. This is exactly the type of growth taking place in the real world, in technological companies right now. That's because technology builds off each innovation that came before it. It ensures that each new step is larger than the previous one. Gordon Moore, one of the founders of tech giant Intel, first recognized this phenomena in the 1960s when he noticed the number of transistors per square inch on integrated circuits seemed to double every 18 months. In other words, he saw that computers double in speed and capacity every 18 months. He predicted that this trend would continue well into the foreseeable future. And that's exactly what's happened. Computer power and speed is rising while cost is collapsing. Here's what this incredible change looks like in the real world. In the year 2000, it cost $46 million to buy a computer that could perform 1 trillion operations per second. By 2016, you could buy a computer that performed 8 times that many operations per second for just $400. That's exponential progress. In 1976, a digital camera weighed 4 pounds, cost $10,000, and only had 0.01 megapixels. Today's digital cameras have 1,000 times the megapixels, weigh 14 grams, and cost $10. In other words, they're a billion times better. The first commercial GPS unit weighed 50 pounds and cost over $100,000 back in 1981. Today, GPS comes on a 0.3 gram chip and costs less than $5. Exponential progress explains why the smartphone in your pocket is 1 million times faster than the computers that sent the first men to the moon, and why internet adoption follows the same exponential rate of growth. The fascinating thing is, most folks can't appreciate exponential growth as it's happening. When a small number grows at an exponential rate, the first stages of growth aren't incredible. It's hard to notice. The growth shown on a chart does not soar upward during the early stages. That's why this is so hard for most people to see. It isn't until the later stages that the big gains are noticed, until it's too late. The extraordinary growth happens at an inflection point in time, when the exponential growth begins to snowball and make things change at stunning rates. This is the liftoff point you see on this chart. Over the last 4 decades, advancements in computing power, data storage, communications gear, and other technologies have followed a trajectory like you see on the left side of the chart. This is because they started at very low levels. But after many years of advancing at exponential rates, the technologies I just listed are entering the liftoff phase. This rapid increase in the rate at which the world is changing has stunning business and investment ramifications. The world around us is changing at never-before-seen speeds. The speed and capabilities of our computers are increasing at unfathomable rates. And it's catching many people off guard. This is creating a gigantic shift in the way our economy works and how we build wealth. Today, the acceleration of our technological progress allows companies to operate with just a fraction of the number of employees businesses used to require. 40 years ago, it took the work of tens of thousands of people to build a business worth $50 billion. Now it takes less than 2,000 people. In 2019, the workplace software company Slack achieved a market value of $23 billion. It had less than 1,700 employees. Getting to a $23 billion valuation with just 1,700 employees never used to happen. Now it happens all the time. Back in 1989, Kodak had about 145,000 employees and was valued around $16 billion. But in 2017, Snapchat achieved a $24 billion valuation and just had 1,800 employees. Back in 1964, AT&T had more than 750,000 employees. But in 2017, Google was bigger and far richer company than AT&T, with 92% fewer employees sharing the wealth. Plus, people who invested in Google when it went public made about 17 times more in gains than those who invested in AT&T over the same time. The best new companies of today simply don't need many people compared to the companies from a decade or two ago. The number of great jobs is decreasing, while the pay for these employees who get the jobs is radically soaring. This is why the wealth gap gets wider and wider every single year. The incredible rise in computing power, automation, and robotics makes all these things possible. The rules of business and building wealth are being rewritten in front of our very eyes. Over the last few decades, it took on average about 20 years for the typical Fortune 500 company to reach a market capitalization of $1 billion. In 1998, Google reached $1 billion in market cap in just 8 years, which was considered incredible. By 2004, Facebook had done it in just 5 years. By 2009, Uber had done it in under 3 years. In 2012, virtual reality from firm Oculus did it in under 2 years. This chart displays the amount of time it took for companies to hit $1 billion market cap. As you can see, it's taking less and less time to generate incredible wealth. Investors are enjoying the benefits. Never before have such small groups of people built such incredible wealth in such short time frames. Early Facebook shareholders enjoyed as much as a 1,507% return on their investment in just a few years. Tesla investors who bought the IPO have made over 9,100% in gains. Early Google investors made over 2,700% in gains. By now, you can see how the time it takes for massive change is getting compressed. Industries are being transformed in a short time. As I've shown you, the increasing rate of change in the world should terrify some people. It will wreck family businesses, careers, and investment portfolios. New industries are springing up at a rapid and ever-increasing pace, while old industries are being demolished at a rapid and ever-increasing pace. As Uber and Lyft soared to billion-dollar valuations, the old taxi industry was devastated. It lost millions in revenue. This is the Technochasm splitting apart before our very eyes. As Apple's iPhone dominated the smartphone market, the losing competitor BlackBerry saw its share price plummet more than 90%. Those who invested in Apple saw life-changing rewards. Those on the wrong side got crushed. As Amazon's valuation surpasses the $1.6 trillion mark, dozens of brick-and-mortar retailers continue to slide into bankruptcy. Welcome to the Technochasm, and the rate of change is speeding up every year. The rate of change we saw in the world 10 years ago is much faster than it was 20 years ago. The rate of change we saw in the world 5 years ago is much faster than it was 10 years ago. And yes, the rate of change we're now seeing is much faster than the rate of change we saw 5 years ago. The destruction of certain industries is only going to get worse, much worse. while the money being made by a select few is only going to be more dramatic. Some folks, and my hope is that you will be among them, are going to make more money more quickly than ever before. I can show you how. Few people understand this phenomena better than I do. For the past 4 decades, I've had a front row seat to the incredible technological change taking place in our world. Back in the 1970s, I was working under a Wells Fargo executive, a mentor of mine, who granted me access to one of the world's first corporate mainframe computers, as big as a room back in those days. Keep in mind, this was back when computers were a cutting-edge technology almost no one in the world was even using, save for government agencies like NASA and a few big corporations. I was tasked with using a computer to analyze and find winning stocks, one of the first to do so. The thinking was these new supercomputers might completely change the Wall Street game. As a student of probability and statistics, I was certainly up to the challenge. Now the epiphany was not just the fact that I just found a way to beat the market, by 3-1 no less, using a powerful computer. Forbes would later call me the king of quants for my efforts. MarketWatch a wonder kid. But rather the true revelation was the speed and the ease at which I was able to do it. That one man could single-handedly complete a task that normally took 10, maybe even 20 market analysts. And I did it in a fraction of the time. One person completing the work of many. The big picture was not lost on me. I could see we were at the forefront of a massive change. The increasingly fast pace of technological progress, in particular, the rise of computers, would be a disruptive force in society. Businesses who needed accounting to process vital statistics, store information, organize files, keep inventory, and innumerable other tasks would leave the paper-based analog world behind and increasingly turn to computers and automation. This trend would only accelerate over time. The implications were immense. I surmise that companies and investors who align themselves with this shift would advance at breakneck speeds. Their revenues, profits, and stock prices would soar. Those who didn't embrace this change would see their revenues crash. Portfolios would crumble. I saw an opportunity. So starting with just $300,000 collected from family and friends, I began a small investment fund that backed the technologies leading the revolution. I began publishing research urging folks embrace the shift to an increasingly computerized world. I recommended people invest in the companies developing the powerful mainframe computers businesses were employing to increase efficiency and productivity. Like IBM, when it was trading at the equivalent of just $8 per share, before it shot to more than $200. I recommended the young startups bringing the computing revolution into our homes. I was one of the first to recommend a little-known company founded by 2 guys working out of a garage in California called Apple, when it was just $1.49 stock before it soared more than 31,000%. A PC maker called Compaq before shares soared as high as 2,460%. And a promising young company called Dell, who was revolutionizing the PC mail order business when it was less than $1 before it went up more than 500-fold. I told folks to buy businesses developing the revolutionary software that enable these computers to be used in our homes and by small businesses. One such program was an integrated spreadsheet software breakthrough, saving its users stupendous amounts of time by allowing them to automate calculations and financial analysis instead of doing single calculations by hand. Today, Excel is the world's most popular spreadsheet software. One person running Excel can do the work of 1 million accountants from days past. I knew the company that created it, Microsoft, had the potential to create generational wealth for its investors. I told folks to buy shares well before it was a household name, when it was a 39-cent stock, before it shot up 15,483%. I pounded the table on the producers of computer memory. Like Micron Technology, I recommended it at less than $1 per share before it went to $96. The silicon microchip and innovators like Intel at around $3 before it shot up to $70. Before long, my recommendations were outperforming the market by an unheard of 6-to-1. That's 6 times better than the stock market. In the financial world, that's a pretty rare feat. I was the subject of best-selling books, media interviews, wealth, and notoriety. The Wall Street Journal said most money managers could only dream as having as much success as me. But my work was far from complete. As we entered the 1990s, I knew the next phase of the digital revolution was upon us. Our computers were becoming connected. I recommended the internet networking firm called Cisco before it soared 38,000%. Database innovator Oracle before it went up 7,455%. Not long after, I began writing about a small company radically transforming the internet space. Few people at the time understood its business or recognized its importance. But I knew this company, a first mover using the disruptive power of the internet to underprice brick and mortar stores and selling things online, was going to completely transform global commerce. I recommended Amazon at $46 before it shot up to $3,400. And that's the key to getting rich in the fastest, most innovative new tech stocks. Understanding which businesses will leverage the power of exponential progress to their advantage and go on to mint billions, even trillions of dollars in profits. It's why MarketWatch called me the advisor who recommended Google before anyone else and enabled me to uncover visionary chip maker NVIDIA when it was an $18 stock before it shot up to more than $500 per share. It's why my friend and billionaire Steve Forbes said I have the most enviable long-term track record, and why I've been called one of the most important money managers of our time. Again, I say these things not to brag, but rather to show when it comes to understanding the law of exponential progress, few people are as well versed as me. Understanding this very simple but very powerful force has given me and those who follow my work a great life. And don't worry, it's not too late. You haven't missed a thing. In a moment, I'm going to show you the secrets to uncovering the next Amazons, Googles, and Microsofts. These companies are on the launching pad as we speak. I have a few favorites I want to tell you about, but first, we're about to enter the fastest, most disruptive period of the Technochasm. There's no doubt in my mind the next few years will be the greatest period ever to be a technology investor. There will be more disruption in the next 20 years than the previous 80 years combined. Converging technologies like 5G, artificial intelligence, driverless cars, augmented reality, blockchain, and more will completely reshape our world. And with all that disruption comes an incredible opportunity. The convergence of these forces will dwarf economic and societal impact we saw with the PC and internet in the 1980s and 1990s. Folks who are prepared for this change will prosper. Exponential growth will soon begin to snowball and make things change at stunning rates. What's coming could be the biggest financial opportunity of your life. An opportunity to take the fast track to financial freedom and to watch the value of your savings soar over 100-fold. Just consider what's happening in the automotive sector. Autonomous vehicles, cars that can drive themselves, is just one area where I believe incredible new fortunes will be made. This isn't some sci-fi technology that's going to happen sometime far off in the future. That's what most people don't get. It's happening now. If you're one of the ones who scoffs at this notion, you're going to get left behind. Actually, this trend has been quietly picking up speed behind the scenes. In 1999, GPS units began showing up in cars. The change may have been abrupt at first, but eventually we got used to the idea that our cars could tell us where to go. Shortly after, collision detection sensors began appearing in cars to alert drivers of objects and people when backing out of the driveway. In 2003, the first cars were introduced that could parallel park themselves. Do you see how exponential progress works? How change was gradual, almost imperceptible at first, but the changes just keep coming. Then lane assist became standard in many cars, so you don't run off the road if you get distracted or doze off at the wheel. In 2014, Tesla introduced Autopilot, which features lane change centering, traffic-aware cruise control, self-parking, automatic lane changes, and semi-autonomous navigation. Chevy introduced Super Cruise. Volvo has Pilot Assist. BMW has Driving Assistant. Subaru has EyeSight. Almost all car makers have some form of semi-autonomous driving capabilities. This is a trend that's not going to reverse itself. All Tesla models are now built with autonomous vehicle capabilities. My Audi RS7 and RS Q8 each have thermal imaging to see animals, people, anything warm-blooded, and will automatically apply the brakes if something unexpectedly gets in the way. My point is, after years of relatively modest advancement, driverless cars are now entering the liftoff stage. This is the law of exponential progress happening before our very eyes. This is how it happens. A long series of tiny gradual changes alter our world, yet we barely notice them until we wake up one day and realize a massive change has taken place. If you want to make a fortune in the coming months and years, I urge you not to miss out on this trend. The coming revolution in transportation will be massive. The way we get to work, get groceries, go on vacation will change forever. Pretty soon, cars will no longer be owned, but subscribed to. They pick you up and drop you off as you please. No more parking, no more insurance, no more repairs, no more oil changes. This massive new trend is known as transportation as a service, and it will be the biggest change to transportation since the birth of the automobile itself. Think about what this will do to the insurance industry when most people don't even own cars anymore, or city revenue when parking meters go away, or when they can't issue parking tickets. Think about what this will do to the oil and gas industry when all of our cars go electric. But this trend goes far beyond you and me. You better believe that corporations who normally depend on drivers will make the switch to driverless vehicles. As many as 25% of American jobs are at stake. Autonomous vehicles never need a break. They don't get paid a salary. There's no vacation time to worry about, no sick leave, no 401k or pensions. A human being simply can't compete. I'm not saying I agree with these changes, but the fact of the matter is that you or I are unlikely to stop any of this from happening. You can embrace this trend and get rich, or you can ignore it and get left behind. Look around. This is already starting to happen. Uber just ordered up to 24,000 cars from Volvo for its driverless fleet. Waymo, the Google-owned driverless car company, recently ordered 62,000 driverless minivans from Fiat Chrysler and 20,000 Jaguar SUVs. Supermarket chain Kroger is beginning to implement driverless cars to deliver groceries. Domino's Pizza and Pizza Hut are doing the same. Jeff Bezos of Amazon just placed an order for 100,000 vans that will ultimately drive themselves. FedEx, Walmart, CVS, UPS are all incorporating driverless vehicles into their daily business operations. And numerous cities around the nation are test beds for driverless car technology. I have no doubt this will be one of the biggest investment opportunities in the world over the next decade. Folks who are prepared for this change will prosper. Those who aren't will be left behind. And it's not just blue-collar jobs at risk. 50 years ago, a white-collar worker had nothing to fear from technology. Computers simply couldn't compete with white-collar workers when it came to complex analytical tasks like tracking investments, crafting retirement portfolios, processing financial transactions, analyzing marketing data, and reviewing contracts. But the combination of artificial intelligence and software is over 100,000 times more powerful than it was in the 1980s. Computers can do all those tasks and many more. The sad part is many people with good white-collar jobs don't think technology poses any risk to them. They're not taking any steps to protect themselves and their families from the rise of technology. But they should. Research firm HIS Marquette says that technology-related job losses or reassignments will impact a stunning 1.3 million banking and Wall Street jobs by 2030. The Financial Times reported that in 2000, there were over 5,500 floor traders on the New York Stock Exchange. Now there are less than 400. These high-paying Wall Street jobs, which facilitated transactions, have been replaced with electronic order routing. Forrester Research says that 1 million people in sales and marketing will lose their jobs to marketing software programs. If you think about it, it's common sense. A lot of marketing departments are staffed with people who collect and analyze marketing results. But advanced software can do these jobs much more efficiently than humans can do them. Good human resource jobs are at risk as well. In the old economy, handling a company's payroll, health insurance, and vacation required large staffs. But now, software can do those jobs much more efficiently. Are you in the recruiting business? Your job is at risk as well. More and more companies are using software to select the best job candidates. Companies now use software to sift through applications and assess video interviews. Only after this automated selection is performed do human recruiters come in. Hundreds of large firms, including Goldman Sachs, Morgan Stanley, and Citigroup, already use this kind of service. Are you a lawyer? Incredibly, your job may be at risk too. In 2018, a study showed that software could detect mistakes in several contracts simultaneously in just 26 seconds with 94% accuracy. Meanwhile, it took a group of 20 lawyers 92 minutes, over 200 times as long as the software, to perform the same task with just 85% accuracy. When it comes to sifting through large amounts of data and cross-referencing it, humans simply can't compete with software. Some people say that technology creates more jobs than it eliminates. That's often true in individual companies. However, here in the 21st century, many of the new jobs being created don't pay much and offer little in the way of personal fulfillment. New technologies will certainly make it harder to bargain for higher pay. Why would doctors get paid more when state-of-the-art AI software can discover tumors more accurately? Why would lawyers get paid more when incredibly powerful software can review and evaluate contracts faster and with better accuracy? That's why it's critical to make investments in yourself, your business, and in your portfolio to ensure that you survive and thrive the coming wave of job changes and industry elimination. And because I've shown folks how to capitalize on these opportunities, I can show you exactly what's happening next and what to do. By now, I hope it's obvious which side of the technochasm is the right side to be on. You want to ensure you're invested in the businesses and industries that can't be destroyed by the Amazons, the Googles, and Microsofts, and the new disruptors coming up behind them. You want to cut highly vulnerable old businesses out of your portfolio. They are ticking time bombs. And most importantly, you want to ensure the extraordinary power of exponential progress is working for you, not against you. With the most important financial decision you'll make for the next 20 years in mind, here are 3 key steps you must make to ensure you're on the right side of the technochasm. Step number 1, own the kings of scalability. If you want to make a fortune in the coming months and years, you must understand how to profit during a technological revolution. Remember this word, scalability. The typical old 20th century company had to invest massive amounts of money in real estate, heavy equipment, and workers to survive and turn a profit. Blockbuster had to invest millions into brick and mortar stores, tens of thousands of employees, displays, and inventory. Same with car makers like General Motors and Ford. Same with steel makers like U.S. Steel. Or consider the billions of dollars an airline has to invest in planes and maintenance. On Wall Street, these kinds of businesses are often said to be capital intensive. Sure, they can make money, but the capital required to start, maintain, and grow these kind of businesses is astronomical. As you can imagine, having to invest billions of dollars to get a factory up and running, and then having to continually invest in the factory to keep it current, is like a lead weight on a company's profits. Those companies are getting wiped out. On the other hand, you have asset-like, extremely scalable technology businesses like I've described in this presentation. These are the businesses taking over the world and massively increasing the wealth gap. Sure, it takes some money to get an asset-light software or social media company started, but it's a lot less compared to an airline, car maker, or steel maker. I like to think of scalability as infinite, costless copying. Companies deploying software, database technologies, streaming movies, and other digital assets can reproduce these products and services for everyone practically at no cost. One small company, even a few people, can supply everyone on the planet on their own. Thanks to the scalability of technology businesses, a software company like Microsoft can produce and sell additional copies of its software at minimal cost. Netflix can stream movies digitally, so these companies' revenues can rise much faster than costs. As a result, these businesses enjoy profit margins 5 to 10 times larger than asset-heavy businesses. That's why in recent years, companies like Microsoft, Google, and Amazon became the first companies in history to reach trillion-dollar valuations. They made their shareholders rich, while many old American businesses closed their doors. Just look at the stunning visual examples of what it means to be on the right side of scalability and the technochasm and the wrong side. This chart shows the performance of the iShares North American Software ETF versus the performance of the SPDR S&P Metals and Mining ETF. As you can see, the software fund, which consists entirely of highly scalable tech stocks, is up 281% over the past few years. Meanwhile, the mining ETF, which consists entirely of old mining companies, has declined 41% in value. That's the technochasm happening before our very eyes. Or let's take the online retail technology giant Amazon versus the old manufacturing giant General Electric. Few businesses represent their industries and generations better than these two companies. Amazon is an icon of the new, and GE is an icon of the established. As you can see, Amazon is up 962% over the past 5 years. Meanwhile, GE has declined 73% in value. Those on the right side of the technochasm got incredibly wealthy. Those on the wrong side got crushed. For another look at how the new is outperforming the old, let's look at the returns generated by Netflix, representing the new tech, and General Motors, representing the old. As you can see, Netflix is up 896% over the past 5 years. Meanwhile, General Motors is down 9%. Incredible. And lastly, have a look at how software giant Salesforce.com is faring against FedEx, the old transportation giant. As you can see, Salesforce is up 311% over the past 5 years. Meanwhile, FedEx is up just 34%. Investors are watching this new crushing old story play out year after year. Folks with portfolios heavy in old industries are struggling to break even and often losing money, while investors in technology make enormous returns every year. Think about the implications of all this for a moment. If your portfolio holds a lot of slow growth, old stocks, and grows at 6% a year, and your neighbor's portfolio holds innovative tech firms growing at 100+% per year, that's the unseen force of the technochasm at work. That's you falling behind. That's why a decision to stuff your portfolio with asset-like, extremely scalable technology businesses instead of asset-heavy, non-scalable old businesses has $1 million implications. You can choose to build wealth rapidly with super scalable businesses with huge profits, or languish with outdated losers. The trend of scalable, super high margin technology businesses rapidly creating massive wealth is as strong as any trend in the world. It will be that way for decades into the future. My advice is to get your portfolio on the right side of the technochasm. It all begins with step number 1, owning the new and rising kings of scalability. Yes, you want to own Amazon, Netflix, Facebook. But if you want to see truly incredible gains, you must know who the next generation of highly scalable tech businesses are. These companies are growing faster than ever before, And because of technological advances, they don't need many employees to do it. Take a company called Paycom, one of America's leaders in human resource software. Its products help companies manage their payrolls. And it provides these services with just 1/15 the employees of traditional old-school payroll companies. There's amazing wealth creation happening with Paycom software. Thanks to incredible demand for its services, Paycom's market value increased 1,050% since 2015. Or consider the incredible wealth creation shareholders of Shopify have enjoyed over the past few years. Shopify is an innovative firm that helps businesses sell their products and services online. It's a huge hit with customers. It has 1/1000th of the employees Walmart has, yet it is twice as profitable. As a result, its shares have skyrocketed 2,116% over the past 3 years. This is why scalable tech firms are transforming entire industries, practically overnight, and making investors rich. And don't worry, you haven't missed out. The good news is there are a dozen or more of these fast-growing tech firms emerging every year. In fact, I've just identified 3 I recommend you buy right now. One of them has created a software platform that is revolutionizing the way businesses manage and analyze their projects. Businesses are going crazy for it. This company claims 42% of the 2,000 largest global companies among its customer base and gaining, which is why sales are growing at a blistering 30% per year. Of course, a few years of incredible growth is great, but sales mean nothing if businesses don't renew these services year after year, a key metric most analysts fail to take into account. A whopping 99% of customers renew this company's software. This business is making enormous profits. In fact, it reminds me of Microsoft when I first recommended it at 39 cents per share, all the way back in the 1980s. Because few investors know about it, it's one of the best bargains in the entire investment world, and it's positioned to grow rapidly in the years to come. Another company is bringing the incredible power of the blockchain, one of the most secure digital infrastructures we've ever known, to the world's leading financial institutions. Even everyday people like you and me. I could go on all day about the revolutionary impact blockchain will have. It's already being called more revolutionary than the cotton gin, the steam engine, the PC, and the smartphone combined, even saying it could reverse the course of civilization and upend the world's most powerful companies. All you really need to know is this. The blockchain will entirely transform our economy and financial system. And there's one little known company helping to make it all happen. I'm confident this company could go down as one of my all-time great recommendations. Again, few people know anything about it yet, which makes right now the perfect time to stake a claim. You'll learn about every one of these incredible businesses in my new report, The Kings of Scalability. 3 must-own stocks to buy now. Odds are most Americans have never heard of any of these companies, but they all have 3 things in common. They are revolutionizing the way we use technology. They're extremely scalable, and best of all, there's plenty of room for growth. They're poised to make their shareholders incredibly rich in the coming years. The way I see it, it's crazy to own low-profit Stone Age stocks when there are dozens of companies you can own that are putting the magic of exponential progress and scalability to work and creating hundreds of billions of dollars in wealth at rates we've never seen before. That's why I want to put this report in your hands today. But before I show you how to claim your copy, There's another step you'll need to take to ensure you're on the right side of the technochasm. Step 2, profit from the network effect. To fully tilt the power of exponential progress in your favor, you'll need to know about another incredible wealth-building phenomena. It's a business and communications phenomena called the network effect. The network effect occurs when each new user of a service or a product increases the value of that service or product. Take the telephone. In its very early stages, the telephone wasn't a hugely valuable invention. That's because only a few people had telephones. If you had one of the early telephones, you couldn't talk to many other people. They didn't have them. However, once more and more people saw the value in telephones, they started buying more and more of them. After a while, you could talk to dozens of people who had phones instead of just 2 or 3 people with phones. What followed was a virtuous, self-reinforcing cycle. The more people had phones, the more valuable phones became. The more valuable phones became, the more people bought them. As even more people bought phones, they became even more valuable, and so on. This kind of virtuous, self-reinforcing cycle is called a positive feedback loop. For another look at the network effect, let's take a quick look at one of the biggest business success stories of our time, Google. In the early 2000s, Google founders Sergey Brin and Larry Page developed the most efficient way of searching the internet. Their service was far better than any other early search engines. As a result, lots of people wanted to use Google's search engine. The more people used Google, the more people wanted to ensure their website was listed with Google. The more people wanted to be listed, the better the search results got. The better Google's search results got, the more people wanted to use Google. In addition to serving internet searches, Google also developed a way to deliver targeted advertising. For example, a person searching for vacation ideas was served with vacation-related advertising. The more people visited Google, the more advertisers wanted to advertise on Google. The more advertisers Google had, the more targeted the advertisements became, which attracted even more users. Google created a virtuous, self-reinforcing cycle that exploited the network effect to the tune of creating a company worth more than $1 trillion. By the time he was just 37 years old, Google founder Sergey Brin was worth $20 billion. Universal connectivity and the network effect are the forces behind most all of the mega successful technology winners of the past 20 years. Uber, which went public in 2019 at a giant $82 billion valuation, is another great case study in the network effect. The more users Uber attracted, the more drivers it attracted. The more drivers attracted, the better it could serve customers. The better it served customers, the more customers it attracted. It created a virtuous, self-reinforcing cycle that made its shareholders obscenely rich. Early Uber investors saw 1,300 times their money. Or take Facebook. With every new user, Facebook became more valuable as a business. As its social network's value increased, its new signups increased. Millions upon millions of people signed up for Facebook because millions upon millions of other people were signing up for Facebook. Facebook became popular because it was popular, leveraged universal connectivity and the network effect, and early shareholders made more than 1,000 times their money. You can see the golden thread here. You can see the smoking gun. You can see how the dominoes fell. If you can identify the network effect in the critical early stages, you can become incredibly wealthy. Of course, everyone knows about the wealth and power amassed by shareholders of tech giants like Facebook and Google, especially folks who've been following my work who have had the chance to get on these businesses before the network effect took hold. By now, their stories are legendary, and the media obsessively focuses on those giants. Since the giants get all the press and attention, few people know about the smaller, innovative technology companies using the power of the network effect to their advantage. The next Ubers, the next Googles, the next Facebooks are on the launching pad. I want to tell you about 3 of them in my special report called The Network Effect, the most powerful wealth creation force in history. One of these companies, for example, is quietly gaining more users at a rate faster than Alibaba and Facebook. Shares are rising faster than Amazon or Facebook too, and trades for just a fraction of the price. It's one of the hottest growth stories in the e-commerce space. Yet I'm willing to bet 99% of Americans have never heard of this company before. The company's sales have already increased more than 1,000% since it began. 1,000%. That's because its business is spreading virally among one key demographic, over 700 million strong, who are devotedly loyal to this brand, with lots of money to spend. But the main thing for investors is it's still unknown, and that's not going to last much longer. That's about all I can say about this business here, except to say this business is incredibly undervalued and ready to soar. This company illustrates the incredible power of the network effect. I promise you, this is one of the most important money-making trends in the world today. And if you miss out, you are going to miss nearly all the biggest gains. And the longer you wait to get in on it, the less money you're going to make, and the further you're going to fall behind. If you want to make sure you're on the right side of the technochasm, you must learn about the power of the network effect. You'll get the full details on every fast-growing firm and the specifics on what price to pay and how much to allocate to each investment. I want to send you this special report as well as my report, The Kings of Scalability, and here's why. By now, I hope you see there's probably no bigger, more important force in the world today than the technochasm. As I've shown, stunning technological growth is only widening the wealth gap in America today. Unfortunately, there's nothing you or I can do about this trend, even if we wanted to. All we can do is make sure we're on the right side of it. I didn't come from money. My father was a bricklayer who worked his tail off to provide for his wife and kids. I come from humble beginnings. I know what it's like to be on both sides of the technochasm. But my story illustrates the incredible power of understanding this incredible force and the powerful change and wealth it can help you create. It's changed my life and the thousands of folks I've taught it to over the years. That's why I've dedicated my entire career to understanding and capitalizing on it. It's given me a great life, but today my goals are much different than they were when I was younger. I already have the houses, the cars, a beautiful family. I don't need the money. I have a bigger mission these days, and it's not to help the rich get richer. There's a crisis in America today. The technochasm is happening whether you like it or not, and things are only speeding up. I want to educate Americans on what is really happening and how to help ensure you'll come out on the right side. Like I said at the beginning of this presentation, the more people who understand what is going on, the better off we'll all be. That's why I spend a lot of time and money bringing this message to you today. We are at an inflection point before the chasm becomes too wide to cross. I believe it's critical for you and your loved ones to learn about the incredible force that has created the large and expanding chasm we're experiencing today. If you're in a crummy job that offers little in terms of pay, understanding the concepts I've been describing today could help set you free. If you want to ensure you have enough money for retirement, these concepts could allow you to do that. If you want to fund your kids' or grandkids' education, yes, these concepts could enable you to do that as well. That's why I want to send you my 2 reports on how to survive and thrive during the Technochasm, especially if you weren't able to cash in on the incredible gains I've shown my readers so far. Like Microsoft at 39 cents, Apple at $1.49, or when I told folks to buy Dell and EMC Corp, the top 2 performing stocks of the 1990s, before they went on historic runs. Or being among the first to find out about Google and other new innovators like Nvidia, Facebook, and Amazon before they were household names. It's still not too late. The next big winners are ready for takeoff, but the timing here is critical. Remember, we are here. There's still plenty of opportunity ahead of us. I want to ensure you have access to all the best knowledge and research about the Technochasm in the months to come. Which brings me to the 3rd critical step I recommend you take today. Step number 3, becoming a master of the Technochasm. Remember, we'll see the world change more rapidly over the next few years than any other group of people in history. I can't emphasize the importance of staying ahead of all the big changes we're about to see. Fortune favors the prepared. The 2 reports I want to send your way are the critical first step, which is why I want to make sure you stay up to date on all the new developments taking place and the chance to be the first to act on them as they happen. The new technologies changing our world as they unfold. Most importantly, new profit opportunities as they arise, as the Technochasm kicks into high gear. And believe me, there will be plenty. It's critical that you stay connected to know everything about all the changes taking place. I want you to become a master of the Technochasm, which is why I want you to receive my monthly advisory letter where I keep readers up to date on everything that's going on, called Growth Investor. Every month in Growth Investor, I'll show you the new developments and technological breakthroughs taking place. I'll show you how to be prepared, stay ahead, and capitalize on all the tremendous growth happening right now. I'll show you some new and incredible ways to make money now as the Technochasm kicks into high gear. Again, this force is extremely powerful, and it will only grow over the coming decade. I cannot stress the importance of staying ahead of the coming changes. This is too important for you to miss. It's too valuable for you to sit on the sidelines. Even if all you do is read about what's happening, it's worth it. I've earned a reputation by helping my subscribers find incredible opportunities to profit from investigating and understanding the big technological trends that reshape our world. Over the past 20 years, I'm proud to say that Growth Investor has outperformed the S&P by a phenomenal factor of nearly 3 to 1. As far as I'm aware, no research advisory of this kind has matched this record. Growth Investor wouldn't have been around so long if it weren't giving people good advice. Just ask longtime subscriber Kevin Jorgensen, who works for one of the big 3 U.S. automakers. Sadly, this business has been hammered in recent years, cutting wages and eliminating tens of thousands of jobs. Kevin saw the writing on the wall some time ago and began following my work. I'm honored to say that Kevin's life has changed dramatically for the better. He's achieved total wealth and financial freedom. He no longer worries about job security. He works only because he wants to, not because he has to. In fact, he wrote to tell me, "I can't wait to get fired." Of course, I would never suggest anyone quit their job or aim to get fired. That'd be crazy. I'm sharing Kevin's letter simply to illustrate the incredible power of the secrets I've been telling you today. He even teaches these concepts to his fellow workers so they too will be prepared. I've heard similar success stories from folks all across the country. I'm confident my research can work for you too. When you become a member to Growth Investor today, here's everything you'll get. 12 monthly issues of Growth Investor. This is my flagship publication where I'll keep you up to date on everything going on in new technologies and the stock market. Each month, I will email you a new edition of my Growth Investor advisory letter with at least one new investment opportunity. Special report number 1, the Kings of Scalability, 3 stocks to buy now. Special report number 2, the network effect, the most powerful wealth creation force in history. Then every Friday, I'll send you a weekly update giving you my takes on the events of the week, as well as a look ahead at the market and our stock news. It's everything you need to know to stay ahead, and it's delivered directly to your email inbox. Plus, if urgent market or stock news breaks, or it's time to collect profits, I'll email you right away to explain what's happening and what it means for your growth investor recommendations. And that's just the start. I'll also send you my must-see report detailing the companies being disrupted by the new technological innovators. Today, there are so many ticking time bombs in so many people's portfolios because of bad business structures, heavy debt loads, and completely outdated business models that are being disrupted by fast-moving and creative technological startups. You simply can't afford to hold these stocks in your portfolio any longer. My research report, Portfolio Destroyers, 10 ticking time bombs to sell now, allows you to quickly and easily purge your portfolio of the doomed firms that are all but assured to underperform in the next few years, and even worse, could potentially go bankrupt. So, how do you get started? Well, before you sign up, along with everything I've mentioned so far, I'd also like to send you one more special investment report I've just put the finishing touches on. It's called the #1 stock for the driverless car revolution. A little earlier, I mentioned how we're in the early stages of an unstoppable trend that will transform your life. After years of relatively modest advancement, driverless cars are now entering the liftoff stage. For investors who are strategically positioned ahead of this huge revolution, the upside is virtually unlimited. In this special report, you'll discover the one innovative company at the epicenter of it all. I'll also send you my report on how to make sure you come out on the right side of the artificial intelligence revolution, called the AI revolution. The combination of artificial intelligence and software is over 100,000 times more powerful than it was in the 1980s. Businesses are harnessing this incredible power to do everything from processing financial transactions, analyzing market data, reviewing contracts, detecting tumors, and more, faster and more accurate than human beings ever could. Demand for these cutting-edge technologies will surge over the next couple of years. AI as an industry is still in its infancy. These are just a few reasons why early investors can make a fortune as AI adds $30 trillion in new revenue to the global economy. The implications are incredible, and economically, they run into the trillions of dollars. The stocks related to AI have a 100-bagger potential. This opportunity is so incredible that I had to create a special report dedicated solely to the new and exciting firms leading this revolution as well. You'll get the full details in the AI revolution. These reports will be among the first things you receive in a matter of minutes when you try a no-risk subscription to Growth Investor. How much does it cost? Well, I'll be honest. Under normal circumstances, access to me and my research isn't cheap. Investment firms like the one I run won't take on new clients worth less than $1 million. And I've charged pension and institutional money managers as much as $30,000 per year for the same caliber research I want to give you access to today. And they gladly paid for it. But like I've been saying, these are not normal circumstances. America is going through serious changes. I want to make sure that everyone, literally everyone in America, has access to this information so that you have the information you need to make smart and safe investments as the Technochasm progresses. Which is why, for a limited time, I'm giving everything mentioned here for the absurdly low rate of just $49 per year. That's right, for about $4 per month, or about the cost of a regular cup of coffee, you're getting information easily worth 1,000 times that. There's simply no reason anyone shouldn't subscribe. I know once you see how powerful our work really is and how we're able to easily point you in the right direction, I'm certain this research will be everything you need to put you on the right side of the Technochasm. Now, of course, nothing in the market is guaranteed, and past performance does not guarantee future results. But even a fraction of this success could change your life. I've made it as easy and as inexpensive as possible to get this information out there. I know there are a lot of people out there who find it nearly impossible to spend anything on information. They think it's all free online. For those folks, I have a message. If you don't see the opportunity to earn a lot of money with Growth Investor over the next 90 days, then I don't want you to have to pay for it at all. That's right. If you are not happy with your subscription for any reason, simply let us know during the next 90 days and you'll receive a full refund for every penny you paid. And you can hang on to all the work you've received. We're not trying to trick anyone into paying for information. If you think there's better information available anywhere, then don't pay. We're happy to part as friends and return all your subscription fees. I don't know of another business anywhere that offers a better guarantee. I make it on my research because I know it's that good. If you are ever not happy with our work, we'd simply like to part as friends. So, we're not asking you to make any commitments whatsoever, but to simply try our work to see if it's right for you. And if you don't agree it's the best investment research you've ever read anywhere, you can ask and will promptly receive a full refund anytime during your first 90 days. To get started and to receive access to everything I've detailed here in a matter of minutes, simply click on the Subscribe Now button at the bottom of the screen. This will take you to a secure order form where you can review everything before submitting your order. Thank you for your time. I hope you take advantage of this opportunity. I truly believe it's going to change the lives of millions of forward-thinking Americans over the next few years. I hope you are one of them. Thank you for watching today. I'm Louis Navellier.